Give us a sense of what we need for another leg up. We seem to be hitting some kind of a wall here with a lot of concerns out there surrounding stimulus, inflation, the pandemic, etc.
Yep, there's a lot of stuff going on out there. There's a lot of rotation going on as well, which we actually think is positive. It gives us, opportunities in some sectors that have pulled back to buy some high quality names. But you're right. But having said that, I think interest rates, are going to be a risk. It's going to weigh. Having said that, I think when we look at valuations, it's largely reflected already. So we're still seeing this as a opportunity to pick up good quality stocks.
Yeah, valuations. Are you more concerned about the P or the E?
Probably more so the price at this stage. At the moment, when we look at the market, we're still seeing it as being somewhat fairly valued. Rotational sector-wise, some things have changed in that leadership. But having said that, it's more so I think if prices sort of languish a little bit, the earnings will obviously catch up to that, and the overall PE will look more reasonable.
Lorraine, you say the valuations reflecting inflation concerns. How about risks from that G7 15% corporate tax? I mean, what risks are there from that? Could that derail perhaps profitability for companies?
Well, yeah, I mean, that's one of the issues that, is a risk that I've stated. I don't think the market's factored in all the potential tax hike risks down the road. I don't think the G7 is necessarily the item that's going to drive that higher. We obviously have the Biden spending, that infrastructure bill that needs to be paid for. So we're actually looking for corporate tax rates in the states to move up. Having said that, we're looking at like a mid-single digit, impact to earnings.
Lorraine, I want to take your attention to Japan. I mean, there's a lot of expectations that it could see a recession. How much of that will weigh on stocks going forward? And add to that, of course, we have the BOJ, the biggest holder of Japanese stocks, well, easing its purchases of ETFs there.
Yeah, I mean, the purchases of ETFs, obviously, in Japan, has supported the market when things have come off a bit. I think more so when we look at the Japanese names that we like, we're looking at for the global recovery to propel that more so than anything else. Because a lot of the companies that we like in Japan are obviously exporters. And I think where we're headed that is that we do think that the inflation risk would start to diminish, globally, particularly coming out of the supply constraints. And ultimately, that will help some of the reinvestment that goes through as well. And that should benefit the capex that goes into capital equipment acquisitions. And that will benefit a lot of the Japanese companies that we do like.
Lorraine, you were mentioning earlier about people actually shifting, rotating into perhaps still the value plays out there at the moment. I noticed that you still like the Tencent, Alibaba, TSMC and Microsoft. They still are amongst your favorites, and you've got select companies in the financial sector which have, of course, dividend plays. You've not changed that much. Why?
Well, we haven't changed that much because that's where we're still seeing the opportunities come through. There hasn't been... I would say that when we look, we're looking for things from a much more stock selective basis. I think some of this, some of the things that have retraced are giving us opportunities. And that's why some of those e-commerce tech names have come out, the high quality names. Some of the sector plays that we're looking at is, as the developed world gets mostly vaccinated by the end of this year, we're looking for the travel segment to still get a nice bump up in terms of earnings. We don't like the airlines as much as we like, obviously, some of the hospitality names, and things like Trip.com and the Macau gaming side are the ones that we think are still below pre-pandemic levels. So that's why we like them.
And Lorraine, you're also liking TSMC, which is increasingly, getting a lot of pressure from Intel, which is also pumping in a lot of money in terms of chip production. I mean, what are the risks there?
Well, for us, for TSMC, it's still the go-to in many ways because of its leadership in this space, and I don't think that's going to change with what's going on with Intel. I think there's definitely always Intel's always been a competitor, and I think So where we see TSMC going forward is that it will still retain its ability to basically monetize the R&D that it spends, and it does on absolute terms spend a lot more than many others do. So I think that's one of the key areas for liking TSMC over a mid to long term basis.